we have now begun in last 6 to 8 months is going to get carried through. There is every reason to believe that this activity will sustain. Nikkei index on both the PMI as well as the services reflected that. The composite index has also gone up. And what RBI found out in the survey is also suggesting the same thing, that the output gap is closing, which means that there is not only more production of goods and services, but possibly now the time has come for the investment activity to also pick up. So all indications are quite positive.
You know, was this just the trigger that everybody was waiting for? Because, you know, so far we were seeing how the government was pushing the pedal. Does it really reflect that, you know, this is the shift that we were talking about?
See, a certain kind of cyclical trend was visible for the last couple of years. There was a lot of investment in infrastructure, in industrials, for a period of 2012-13, then excess capacities got created.
Right.
There were some of those businesses which went non-performing. Especially there were overcapacity created in housing segment.
Absolutely.
And real estate, which led to investment fall. So it takes some time for the cycle to turn and the overcapacities to come into to become reasonably lesser capacities for fresh investment to pick up. So I see it's that kind of turnaround time when we have reached to a stage where fresh investments and capacity utilization is very.
So is it a secular growth that you're seeing, or is it just, you know, some sectors where we are seeing a turnaround?
It's secular would mean every sector,
right.
But I don't think we can say every sector, but many sectors have started moving in. Other sectors would also probably take that much time when their capacity utilization of the existing.
So which are these ones?
It's difficult to get into a specific, but I said housing and the real estate is one major sector where still in many parts of the country you don't have that kind of capacity utilization, that kind of, you still have a lot of houses going unsold,
right.
Unsold inventory remaining, but in some parts it has started picking up. You see in the steel, cement sector that activity coming up, but maybe in some of the durables still you don't see that kind of gap closing coming up. So one can do this sector-wise analysis, but broadly speaking, quite a few sectors have gone into that level, and some may take some time to come.
You know, I'll tell you why I asked you whether it was a sustainable trend or was it a one-off. Because if you see the earnings growth so far, you know, we are seeing how most of the earnings that have been good, it is mostly on account of a lot of companies keeping a control on their cost, which could not be a factor given how our oil prices are moving, given how, you know, we're seeing the rupee really headed. So when do you see that earnings turnaround happening for companies across the board?
So what you mentioned right now is essentially that the corporates have also been cautious, controlling costs so that their profitability improves. But you possibly are hinting at when they have the pricing power.
Yeah, exactly.
That pricing power gives them sort of better turnover in terms of final price. It is all related to the demand-supply situation. So if the industry is producing more than what the demand is, they lose some bit of pricing power. And as the capacity utilizations improve and the demand is in accordance with the supply, then the pricing power comes.
Right.
So it will happen around that capacity utilization and the closing output gap also.
Are there fears that, you know, once the pricing power comes in, there could be a likelihood of it stoking inflation as well?
That also happens. That is, when the output gaps close and the pricing power leaves,
right.
More ability in the industry to raise prices, the inflation does happen. But that is taken care by the fresh investment.
Right.
That is the logic why the fresh investment at that stage starts thinking and taking and creating additional capacity. And then same situations. If you have a situation where the fresh investment come up as soon as the output gaps close, then you may not have actual pricing power going berserk or to levels where it might hurt inflation so adversely.
You know, let me also ask you, because since we were talking about how capex is reviving, there will be funding needs as well. And if you look at our banking sector so far, with an NPA of almost 10 lakh crore rupees, there are 11 banks that are under the RBI's prompt corrective action. Private banks will have to do a lot of the heavy lifting there. And I understand how the government in the last few days has taken, the amendments to the Prevention of Corruption Act as well, so that actual work does not get hampered. The banks start lending once again. But, in terms of the funding activity, how capable are the banks? Are they adept at the changing situation, the changing environment that we've just begun to see?
See, fundamentally, if there are savings available for investment, domestically or otherwise, then it should not be so material that one particular funding channel is used for providing those funding. We have robust saving rates.
Right.
We also have opened up the foreign savings route for FDI and others to come in. Therefore, I don't see overall shortage of funding available for the Indian industry and the business requirement. You rightly mentioned that the banks have had some difficulties, especially the PSB banks. But we have the corporate bond market, which is increasingly becoming bigger and bigger. We also have financing through NBFCs and the mutual fund routes, which is coming up very well. There's a lot of financial assets which are getting created there. We also have robust transfers in the FDI and others. So I believe that the industry will not feel the funds constraint. Funding would be there, and let's hope a lot of work is being done to even turn around the PSBs, right. And they should also be able to have growth as we go along.
So funding will not be a constraint, which is obviously something for us to cheer about. The other factor are the global headwinds. At a time like this, many say perhaps it is too early to celebrate, because we're still not at the 83% level that we were in, back in 2011. Given the global headwinds, given the trade, the anti-globalization rhetoric, the trade wars that we are talking about, add to that how the RBI says vulnerable and volatile oil, the volatility that we are seeing in the rupee as well. How big are these concerns in that sense?
See, again, if you watch the data on oil, on foreign exchange, FPI flows and all, I think we are reaching at a stage where there is more stability. The situation today seems to be better than the situation in May or in June. July was the first month
right.
After 5 months when the debt flows turned positive.
Right.
We have had about $9 billion of outflows in the last 3 months before July. So this signals to my mind more stability. Of course, the risk remains. Even on oil prices, if you would see, July has been far more stable. We have an overall reduction in the oil prices. The futures today available for October later are at much lower levels than they are. Of course, things can change if there are global events of that nature which can affect. But you can never be only pessimistic about what might happen. The world is a real world. A lot of good things happen, a lot of bad things might happen, but we negotiate, we move ahead. So my overall sense is that we remain cautious, we must keep on our eyes open, and yet I don't think the situation is something to be too alarmist about.
You know, I'll tell you why I asked that question. RBI in one of their reports did say that inflation pressures could arise from fiscal slippage. That is one of the concerns that they are talking about. And given how, you know, we are heading into an election year, the compulsion for being populist both by center and state is quite high. In that sense, are we in a fiscal chakravyuh of sorts?
Then again, I would point out to the data. We released the first quarter number.
68% between April to June.
So we had good expenditure, 29% of the annual budgeted one in the first quarter, because we want more expenditure to take place. But we also had higher revenue than last year. We had on the tax and non-tax both sides the higher revenue. Consequently, our fiscal deficit is lower than what it was last year. So these 3 months performance, I think, should convince anyone that we are completely on track.
But isn't the GST asking rates are very high, 1.15 lakh crore rupees per month, and we're still not there? Add to that how we're seeing, you know, the GST Council in the last meeting as well has taken several decisions that will have a revenue implication. Now also we're talking about the GST Council meeting today just getting over. They're talking about digital incentives, and if that also happens, we'll have, you know, a minor fiscal impact. How do you really see those things? The GST asking rate being pretty high.
Do take note of some reductions in the duty, etc., which has been made. But you also need to take about the growth which is coming up, growth in consumption, which raises the level of the taxes which are expected to come. So when you improve the economic activity, when you improve the consumption, it should come up. I think we are steadily seeing the increase in the GST rates. If you improve by about this level, and as we go along, the festival season and other months come, when the buying etc. picks up further, and what we hear about the kind of production which the industry is making, stocking, etc., I think we can have a reasonable confidence that we will meet or substantially meet the GST targets.
You know, the RBI, sir, has gone ahead with 2 consecutive rate hikes in the last 4 months. They've also cited various reasons why they have, in fact, increased their inflation forecast. They've hiked it now. And while their stance particularly remains neutral, they have said how, the MSP hike is one of the factors that they're looking at, a volatile, vulnerable crude, the rise in demand as well, which could stoke inflation. You yourself talked about it. Does it really mean that in an election year going forward, we should be bracing for the RBI to be an inflation hawk?
See, the inflation target is set by the government. It's not the Reserve Bank. Reserve Bank is to deliver that inflation target. The government has set it up in 2016 for 5 years that you should have the inflation of 4%, right? In the corridor of 2%
Right.
each. So when the inflation reaches 5.5%, core inflation is slightly higher. I think it's a commonly shared worry that inflation need to be controlled, to be taken care. And that's what RBI has done. But the reasons which possibly, you just cited some of them, in my judgment, those are not the reasons which will contribute to the inflationary pressures. MSP price is delivered, done with it, we'll make procurement, the sales will start much later. So fiscal impact is going to be much more spread out than what it is. The oil prices we discussed a little while ago also, the volatility is there, but it's stabilized at certain level, it's already factored in. And therefore, I think both on this account that the fiscal performance would be entirely in line with the budget estimates, and there will not be any slippages, etc. And the oil and other factors should also be not contributing that much. I think one can take a reasonable comfort that possibly the inflation front would also be.
Is the RBI being too hawkish then? Is that what you're suggesting?
RBI is doing its own job. they are using the instruments which they have, and those instruments are being used in certain ways, which is fine, and the broader economy also reads them and takes care of them in that. So while the repo rate has been increased, the movement on the yields and other is not as much because those are already factored in. That also assures us that possibly the bonds, etc., have also reached to a certain level where whatever is the expected price increase or rate increase has been factored into. I think that has brought a certain stability.
Should we brace for more rate hikes?
It's difficult to say. It's not my call. It is the MPC which has to make assessment. If they reach to the conclusion that's needed more, they will speak.